Hello, everyone. Um, well, thank you for joining today's Tech Talk. It is great to have you here. I'll give people just a few more seconds to settle in and then we'll get started. Please feel free to use the chat through the session as we'll also leave dedicated time for questions at the end of the session. Um, Today's session is focused on French mandate in reporting for France in Dynamics 365 Finance. I'm going to walk you through the regulatory context, what exactly falls into scope for e-reporting, how Microsoft is delivering this capability in Dynamics 365 Finance, what the setup looks like, and how the end-to-end reporting process works in practice. Before we start, I'm happy to introduce my colleague, Evgeny Popov, who will help to moderate the Q&A today. And a quick note, I have also shared a survey in the chat. Please take a moment to complete it. Your feedback really helps us improve both the product and the sessions as well. My name is Elizaveta Golub. I'm a product manager working on Dynamics 365 Finance in the globalization space. My focus areas include regulatory reporting compliance, electronic reporting, and multi-country regulatory solutions. So this topic is very much at the core of what I work on, helping our customers meet increasingly complex and evolving regulatory requirements across different countries, with France being one of the most advanced and present scenario right now. Let's start with the French mandate. The key date to remember is that the 1st of September 2026. From that date, large and intermediate enterprises must comply with the first phase of the reform, including e-reporting obligation for transactions that are outside the scope of mandatory B2B invoicing. And then in September 2027, the mandate expands to SMEs and micro enterprises. And there are two parallel obligations that companies in France should plan for: B2B invoicing through a certified platform, and e-reporting, which covers B2C and cross-border transactions. The important takeaway is that e-reporting is in e-reporting, the French tax authorities receive VAT relevant data for transactions that are not covered by the mandatory documents and mandatory domestic B2B invoicing. This means that e-reporting is part of the same reform program as e-invoicing, and it uses the same foundation. Reliable registration identifiers and a clear understanding of which transactions are domestic B2B, B2C, cross-border, or payment related. For example, a French company that sells goods online to private consumers will not send those consumer sales through the same domestic B2B invoicing process. However, VAT-related totals still need to be reported. Another example is a French company that issues an invoice to a business customer in another EU country. That transaction is outside domestic French B2B invoicing, but it can still be in scope for e-reporting because the tax authority needs visibility into cross-border VAT relevant activities. Now let's look at what exactly needs to be reported. There are three data reporting streams that compose entire e-reporting scope for France. First, cross-border transactions. These are reported invoice by invoice, including VAT numbers, country, invoice details, and amounts. Second is B2C transactions. These are reported as aggregated. Instead of reporting each invoice, companies report daily totals of taxable amounts and VAT per rate. And the third is the payment data, or so-called encashment, which applies when VAT is due on payment receipt rather than invoice. The cadence is also important. E-reporting is recurring and operational, not a year-end or one-time declaration. Depending on the reporting stream and taxpayer situation, organizations need a repeatable process for collecting, reviewing, generating, and submitting data on time. These streams may look similar from a tax perspective, but they require different data granularity and different validation controls. A simple example for B2C would be a retailer with several sales during the day at the standard VAT rate and several sales at a reduced VAT rate. The reporting expectation is not to list every consumer invoice or receipt one by one, but to report the aggregated taxable base and VAT amounts by rate for the relevant period. By contrast, if the same company invoices a customer in Germany, that cross-border transaction is reported at invoice level because the customer, country, invoice date, invoice number, and amount details matter for the reporting file. One more example is payment reporting. This stream is also split into two substreams: payment information for invoices and aggregated payment information for B2C transactions. The flow is different because these transactions are reported when payment is received, but not when the invoice is issued. This applies to scenarios where VAT is accounted for on payment. So the system must track the payment event and include the relevant data in the payment reporting section for the correct period. So let's deeply look at the structure of the report. The report itself is a structured XML defined by the French external specification. There are three main parts: the header, which contains metadata like sender, issuer, and report type; the transaction section, which contains detailed transaction data divided into two subsections: invoices, providing details of cross-border invoices, and transactions, including the aggregated data on B2C transactions grouped by day, tax rate, currency, tax due type code, and category code; and the payment section, which supports encashment scenarios. The key takeaway is that the output must follow the French regulatory specification precisely. That is why the solution relies on structured configuration and control data collection rather than ad hoc file creation. This is important because the report is only as good as the data that feeds it. Header information depends on legal entity setup. Invoice and transaction section depend on transactions classification, VAT information, customer and vendor identifiers. Payment action depends on the payment-related events that determine when VAT is due. So the XML is the final output, but the real work is ensuring that each source data point is complete and consistently maintained. For example, if the report header identifies the legal entity, but the transaction is missing the correct registration ID, the XML may technically be generated, but still not represent the business reality correctly. Similarly, if a payment scenario is configured or posted incorrectly, the payment section may not reflect the point at which the VAT becomes reportable. This is why data validation should be treated as part of the compliance process and an important prerequisite for proper e-reporting. So, how do we solve this in Dynamics 365 Finance? Microsoft delivers France e-reporting as a standard capability in Dynamics 365 Finance to help organizations collect the required transaction data and transform it into French compliant formats. The solution is built on two core frameworks: the electronic reporting framework, which generates the XML output, and the electronic messaging framework, which manages the lifecycle, data collection, processing, and output generation. The value of using these standard frameworks is that the process is configurable and traceable. Electronic messaging provides the operational workspace for collecting transactions, reviewing results, tracking statuses, and initiating the report generation. Electronic reporting defines how the data is transformed into the required French compliant XML structure. Together, they make the solution more transparent for finance users and easier to support during recurring compliance cycles. The solution is introduced as a standalone adoption, so you don't need to implement invoicing first, and you can only adopt the e-reporting completely independently from invoicing. And thanks to the tool's configurability, the solution also supports multiple VAT registration scenarios that is widely implemented across our customers, especially in Europe. The feature is available starting from Finance version 10.049, and it is also made available for version 10.047 and 48 through specific application builds. So you can find necessary build number on this slide and also in the feature documentation. Now, let's talk about your finance preparation for e-reporting for funds. The configuration flows for steps, and the order is important. First, import electronic reporting configurations and select the default model mapping. Then configure category codes using combination of tax codes, sales tax group, and item sales tax group as as part of the e-reporting format application-specific parameters setup. And after that, you can import the electronic messaging data package from LCS shared asset library. And finally, configure electronic messaging parameters. After these steps are completed, the system has the configuration it needs to identify relevant transactions, apply the correct classification, and generate the required report output. At this point, it is important to understand how reporting works conceptually. In this solution, each generated report is represented as an electronic message in D365 Finance. And electronic message acts as a container for reporting data. It groups transactions and payments for a specific reporting period into a single structured output. Each individual transaction is represented as a message item, and all items are aggregated into one report file. This design allows us to track processing status, maintain traceability, and manage the reporting lifecycle efficiently. The demo that follows this slide later in this session will show the details. In practice, the setup for a specific organization should be validated. That includes domestic consumer sales, cross-border invoices, payment-based VAT scenarios, and multiple VAT registration if they apply. This validation helps confirm that transactions are selected correctly, assigned to the right reporting category, and generated into the expected report structure. So with that, let's move to the first demo. In this demo, I will show how the setup for e-reporting for France end-to-end. I will walk through the main configuration steps and highlight the key areas you need to configure during implementation. I won't go into every detail, but I'll focus on what matters for a successful setup. Focus on how the different pieces connect, e-reporting configurations, tax mapping, electronic messaging setup, so you can understand the full flow rather than just individual screens.
In this demo, I will walk through the setup of France reporting in Dynamics 365 Finance. Before we start configuring the feature itself, it is important to ensure that the foundational setup is complete. France reporting relies heavily on accurate identification of legal entities and their establishments. First, make sure that all required registration IDs are defined. This includes VAT numbers, as well as French-specific identifiers such as SIREN and SIRET. These identifiers are critical because they are used to determine how transactions are reported. Registration IDs must be properly set up and maintained for your legal entity and counterparties of your organization, customers, and vendors. Ensure that the registration IDs of delivery or invoice address of you customers and vendors are properly defined. Next, during invoice posting, verify that transactions are associated with the correct customer delivery addresses that is assigned with proper registration IDs. This is essential because the reporting logic relies on this association to group and classify data correctly. Once this foundation is in place, proceed with the France reporting setup. The first step is to import the required configurations. These define how the system structures and processes reporting data. Import the latest versions of the available configurations, including the data model, the model mapping, and the France reporting format. After importing them, ensure that the model mapping is marked as default. This is important to make sure the system uses the correct mapping during processing. Next, configure application-specific parameters for the France reporting format. These parameters determine how transactions are classified in the final report. In particular, configure the transaction category mapping. This logic determines how each transaction is categorized according to French regulatory requirements. Based on attributes such as tax code, sales tax groups, and item sales tax group, assign the appropriate category values, such as goods, services, non-territorial transactions, or mixed scenarios. Once the mapping is defined, complete, and save the configuration. The next step is to import the predefined setup for electronic messages. FastTrack reporting is built on the electronic messages framework, and setting it up manually would require multiple steps. To simplify the process, import a predefined data package that includes all required entities and initial configuration. Before running the import, make sure that the data entities are refreshed and ready. Then upload the package and execute the import. This step provides a ready-to-use processing framework for FastTrack reporting. Next, configure the electronic message processing parameters. Start with message-level additional fields, which define header information for the report. Here, you specify values such as the sender identifier, the sender name, and the report type. These values are included in every generated report. Then move to message item additional fields, which define attributes at the transaction level. At this level, you need to configure the default value for the tax due date type. 3 is the default value, and it refers to the invoice date. After that, configure the action parameters. These parameters define how the system processes data during different steps, such as generating transaction reports, payment reports, or full reports. Map the required additional fields and message item types to ensure correct processing for all 4 actions responsible for the report generation, or due for those that are going to be used in your organization. Unnecessary actions that are not going to be used in your organization can be deleted from this processing. On the same electronic message processing page, specify security roles that must have access to work with this e-reporting processing for France. Finally, review the executable class settings. These control how the system collects data and generates the report output. The first class is responsible for data collection. It retrieves transactions, payments, and tax data, applies filtering logic, and creates message items. The second class handles report generation. It takes the prepared message items and transforms them into a structured XML output file that represents the final report. Together, these components define the full processing pipeline, from data collection to report generation. Optionally, if the organization operates with multiple VAT registrations within the same legal entity, you can configure the system to report specifically per VAT registration. In that case, apply filters in the executable class that is responsible for data collection to ensure that only relevant transactions are included in each report. At this point, the setup for France reporting is complete, and the system is ready to start processing and generating reports.
Okay. So that was the demo of the setup process for France e-reporting. Let's quickly recap the setup we reviewed in this demo. We imported the required electronic reporting configurations, selected the default model mapping, configured category codes based on tax setup, imported the electronic messaging data package, and completed the main electronic messaging parameters. At this point, the system has the foundation it needs to collect transactions, classify them, and prepare the French e-reporting output. Now let's move to this operation flow that you can see on the slide. Once the setup is done, e-reporting flow is a 5-step cycle. Populate data, review, generate the report, regenerate report if needed, and submit the XML file via platform. This runs on a recurring cadence, typically every 10 days. Let's walk through these steps. Step 1 is populate data. At this step, the system collects the transactions and payments that meet the configured criteria of the populate record executable class for the reporting period and creates electronic message items. This is where the setup will review earlier that that we reviewed on that demo earlier becomes visible. Customer and vendor information, registration identifiers, and payment-related data all determine what is collected and how it is classified. Step 2 is review collected data. Users validate the populated message items before the report is generated. The goal is to confirm that the expected data was collected, investigate missing or unexpected items, and exclude items only when there is a clear reason to do so. This review step is important because it turns the report into an operational control process rather than a black box file generation activity. Step 3 is generate report. The solution supports separate generation of the transaction part, separate generation of the payment part, and generation of the full report that includes both parts. This gives companies flexibility depending on the reporting approach they adopt. If a company doesn't use one of these flows, the unnecessary actions can be removed from the electronic messages processing configuration. So users work only with the actions that are relevant for their process. For the payment part, the flow is different from the transaction flow because the reporting trigger is the payment event. The solution supports two scenarios here. Advanced invoices, such as customer prepayment invoices that use the customer prepayment functionality in sales orders that was recently released, and VAT accounting on payment based on conditional tax, where tax transactions are posted when the invoice is settled with payment. In that case, the payment is included in the payment section of the report for the appropriate period. Step 4 is generate report if regenerate the report if needed. And this step is optional and can be used before submission when users identify and correct an issue, such as missing master data, incorrect classification, or an incomplete payment scenario. After the correction is made, the report can be regenerated so the XML reflects the updated data. If an issue is discovered only after a report has already been submitted, the process is different. The correction should be handled through a so-called rectificative report, so the change remains traceable. It is also useful to explain regeneration and rectification separately. Regeneration is typically used while the report is still being prepared and reviewed. For example, as I mentioned, when a configuration issue or missing data is corrected before submission, and rectificative report is relevant when a previously reported period needs to be corrected after the fact. In both cases, the objective is traceability. Users should be able to understand what was reported, what changed, and how the correction was handled. A practical example would be a reporting period where a team discovers the several cross-border invoices were missing some, let's say, required registration identifier. Before submission, the user would correct the data, regenerate the report, and verify the results. If the issue is discovered only after the report has already been submitted, the process shifts from simple regeneration to correction through a rectificative report. And finally, step 5 is submit the XML file via our platform. That completes the operational cycle. as a result of output generation. The XML file is attached to the electronic message. The user downloads the file and uploads it to the tax authority through the partner dematerialization platform, or PA, that the company works with. After the upload is successful, the user changes in the Dynamics 365 Finance the message status to submitted to indicate that the report has been uploaded and the process is complete. We can switch to the next slide, which introduces the demo. And I believe, now let's move to this second demo. Yep,
Use the France reporting functionality in Dynamics 365 Finance, showing the full process end-to-end, from invoice creation to report generation. We will start with a free text invoice. During invoice creation, it is important to validate the delivery address. In our scenario, the delivery address is in Germany, which impacts how the transaction will be classified for reporting purposes. Next, we review the tax transactions. In this example, the transaction is tax-exempt, which is reflected in the tax calculation. This is important, as tax treatment directly influences how the transaction is categorized in the report. We also validate the registration IDs involved in the transaction. Here, all required identifiers are correctly defined, including the establishment SIRET, the company SIREN, and the VAT ID. These identifiers ensure that the transaction is reported with the correct legal and organizational context. And we can also see the VAT ID of the customer in the transaction defined, based on the delivery address in Germany. Once all validations are complete, we proceed with posting the invoice. After posting, we move to the electronic message items page. This is where transactions are collected for reporting. From the action pane, we click Run Processing and select the Populate Records action. This step retrieves all relevant transactions and brings them into the electronic message items table. It can be configured as a recurring process, for example, running daily to automatically collect new transactions. In this demo, we run it in interactive mode to immediately see the result. As you can see, all posted invoices are now available in the message items list, including the free text invoice we have just created. From here, we can easily navigate back to the original document to review the full details if needed. There are also other invoices and payment information collected in the message items that were previously posted for this demo to illustrate reporting of other scenarios. For example, you can see B2C transactions in the list and also payments. Documents subject to different report sections like transaction invoices, or B2C, and payments invoices, or B2C, are assigned with different message item types. This is how you can understand in which section of the report each document represented by the message item will be included in the report. Once the data is collected, we proceed with report generation to complete the process. Again, we select Run Processing, and this time choose the full report generation action. There are also options to generate reports for transactions only or payments only, depending on your reporting requirements. Similar to data collection, report generation can be scheduled as a recurring background process. For example, to run weekly in line with your organization's reporting cadence. In this demo, we run the process interactively and select the full report option to generate all sections at once. After the process is completed, the system automatically groups the processed message items into a new electronic message. This message includes an attachment, the generated e-report in XML format. We can open the attachment directly to review the report. As you can see, the report includes all relevant transaction and payment data. If we look specifically at the free text invoice we created earlier, it is fully represented in the report, including all required registration IDs of the seller, our legal entity and the buyer, the customer VAT ID, and also the relevant tax information and invoice details. Once everything is correctly set up and validated, this entire process can run automatically in the background. Based on the defined recurrence, the system will collect transactions and generate reports without manual intervention. In this case, users only need to open the electronic messages page to access the generated file and proceed with its submission to the external service. After the file has been successfully submitted to the authorities, the reporting process can be finalized by updating the message status to submitted. This completes the end-to-end scenario, from transaction entry and validation to automated reporting and submission readiness.
Okay, great. Thank you, Evgeny. You can switch to the next one. So in this second demo, we reviewed how the operational process works with real business data. We looked at how transactions are collected, how the system prepares them for review, how the XML output is generated, and how users can follow the message lifecycle through the available statuses. This gives us the context for the status flow shown on this slide. Every action corresponds to a specific status. Data population creates entries. Review can exclude or include message items from the further reporting process. Generation produces the XML output file, and submission finalizes the report. The process can also be automated through batch jobs, but automation depends on clean master data and reliable classification. That is why setup quality is so important before users move into recurring operations. The status flow is helpful because it gives a way to manage the process without treating the report as a black box. Each status tells user where the data is in the life cycle, whether it has only been collected, reviewed, and included, excluded from the report, generated into XML, or prepared for submission. This is especially important when multiple users are involved or when the reporting cycle is repeated frequently. For exception handling, I would position the status flow as the first phase to investigate. If transactions are missing, check whether they were collected at all. If they were collected but excluded, review the message item statuses and classification. If XML generation fails, then check the electronic messages log. They include all complete information about the report issue. For batch processing, the automation is the final step of the setup. It is tempting to automate immediately, but if classification rules or master data are not stable, automation can simply repeat the same mistake faster. The better approach is to run the process manually or semi-manually during initial validation, confirm that the status flow behaves as expected, and then move toward scheduled processing once the team is confident in the results. And I believe we can switch to the last slide in this presentation, the summary. Before we move to the Q&A, and I see that we have quite a number of questions already posed. Thank you so much for those questions. So let's just quickly summarize the key messages from today's session. First, e-reporting is a core part of the French reform. Second, the reporting streams are B2C transactions, cross-border transactions, and payment-related data for encampment scenarios. Third, the quality of the generated XML depends on quality of source documents, including VAT registration, tax setup, customer and vendor classification, and payment information. 4. Dynamics 365 Finance supports the process through electronic reporting for the file generation and electronic messaging for operational lifecycle management. And finally, I would again reiterate on the importance of the process validation with realistic scenarios before automation of the recurring reporting cycle. And the key takeaways are the following. Start with the scope. Confirm which transactions are B2C, cross-border payment related, or outside the reporting obligation for your organization, and validate the filtering criteria for the electronic message item types. Validate master data earlier. Registration IDs, VAT setup, and customer and vendor classification are critical for correct reporting. Use the statuses flow. Investigate missing or unexpected transactions through collection, review generation, and submission statuses. Separate regeneration from correction. Regenerate before submission when data is fixed, and use rectificative report using a properly assigned additional field of the electronic message when a submitted field must be corrected. And last but not least, automate only after validation. Batch processing is valuable, but only after the team confirms that the process is stable and repeatable. Thus, the successful Frenchy reporting is not only about generating a compliant file, it is about building a repeatable, traceable, and supportable compliance process. And with that, I think this brings us to the Q&A part. And let me switch to the questions that were posted. I will start to try to read them from the very beginning. When you say that e-reporting could be configured independently from e-invoicing, does it mean that e-reporting is not dependent on status of individual e-invoice equal to e-invoice solution as proposed by Microsoft, which relies on ADCOM? Yes, I believe this is correct understanding. So as you could see from those demos and their presentation, this is a standalone feature. It does not rely and does not require any settings of the e-invoicing in the system, and you can use it together or completely independently from e-invoicing feature in finance. There are also some comments to this. How is the upload of the XML to the TA done? Is it the manual process? Yes. Currently, in the scope of the solution that was released in 10.049 and backported to those bills that I mentioned earlier in 10.048 and 47, this is manual approach in terms of the submission of the file. We have in our roadmap to build another step on top of the currently existing steps of this electronic messaging process. And we are considering to add this additional step of the integration, but that is going to be evaluated separately. And if the team decides we go with that integration, it will be released as an additional feature to be already released part of the functionality. It would also depend on the, I would say, customer's request. So if we see no interest in this integration, we'll probably consider not introducing this integration as in scope of our out-of-the-box solution. So in case you are interested in this integration and you have any comments, please participate in this survey and provide us with all the information you have in mind and all your feedback and thoughts and also the expectations of those additional steps to be included into the existing flow. And another comment here, please. Uh, yeah, about the Viva engagement. So thank you so much. Yes, everyone who would like to be added to any Viva engagement group, also provide us with this information, and your email would be added there. How do we handle the failed XML outputs? How do we handle the failed XML output? So it can be regenerated after it is corrected, depending on the reason of that failure. If you mean it was failed on the side of the submission when you try to upload it to PA and you've got some technical or business validation error, which would mean that the report actually was not submitted. So you would have to identify the reason of that problem, preventing from the successful submission and regenerate that report. But in case you would receive an information about some failure on already submitted, I don't know how it could be failed if it was successfully submitted, but maybe you could get some business validation errors after the submission. That depends on how the PA actually support this interoperation. So if they support somehow partial submission or something like that, you can consider to regenerate an corrective report, which is called rectification. And for that reason, we have introduced an so-called additional field on the level of the electronic message. So when the electronic message was already submitted, you can change the additional field to rectification and regenerate the report. So once it is regenerated with all the necessary corrections done to the data, feed it to that report with the additional field switched to the rectification, it can be submitted again to the authority or to the PA, and it will be considered as the rectificative report to the previously submitted one. Hope this clarifies. I will try to switch to the next when the full documentation will be available online. It is already available online, and you can find the link I have placed also as the comment to that question. So if it is not visible, please let me know. I will duplicate it somehow else, or I can probably do so. No, right now I cannot do so. So hopefully it is visible. But you can easily find that documentation on the French documentation. How is it called? Section in the table of the content in the finance documentation. So documentation is available. You can start reading it, and it also provides the number of the bills in case you would like to start preparing to roll out this solution. Will there be a default auto-populated setup? Yes, there is the default auto-populated setup for the entire electronic messaging processes, and it also includes the predefined setup for the filtering for all the 4 different sections of that report. But it obviously doesn't cover any company-specific settings that may be required. So the first thing to do, I would suggest to look at that, those filtering in those executable classes, specifically in the populate record action executable class, you would find 4 filters for 4 different sections of this report. and adjust them as necessary to accommodate company specific requirements. Like maybe you would need to add a field to those filters for the, let's say, customer group or anything else that you specifically use in there. So consider those filtering that are already predefined with the package as a good starting point, but please adjust as you need and customize as you need according to the specific company requirements. And we have 2 more minutes. I will try to cover as much as I can. Is there any questions of getting the final e-reporting XML file to be sent as payload to a PA, not using electronic messaging, but a different API? Basically, as I mentioned, we do not introduce any direct integration within that electronic messaging processing. So yes, you can just simply get that XML file as attachments from the electronic message and upload it to the PA of the organization's choice. And by the way, just all the questions that I cannot manage to cover during this session, I will collect all those questions, and I will push them as part of this presentation. So when the tech talk will be completed, this recording will be published, and the presentation can also be published. So in that presentation file, I will add all the questions from the session with the answers. So do not hesitate to reach out there. And because we are in the end actually of the time slot for this session, I want to thank you so much once again for your participation in this tech talk and for all your attention and for all your questions. So please send us your feedback via this survey. It is available, and it is highly instrumental and efficient way to share your feedback with our team. I want to thank Evgeny so much for your help during this presentation as well. And let me once again apologize for these technical issues that I experienced today with the demos. I hope that it was all useful and helpful in your setup. Please join our group in Viva, ask your questions, and let's keep in touch in case you need any additional session to cover some specific scenarios that could be considered as common across different organizations or different implementations. So let's keep in touch. I hope you had a good session with us and have a lovely end of the day and also the week. Thank you, everyone.